Imagine a world where today's biggest tech breakthroughs seem like child's play. Well, welcome to quantum computing. Quantum computing isn't just science fiction anymore. It's shaping up to be one of the most transformative technologies of our time. And here's the kicker. The revolution could unlock explosive opportunities for investors willing to act now. Whether you're a beginning new option trader or an experienced trader, stick around. In this video, we've got something for you. We're going to break down exactly how to use a LEAPS and poor man's covered call to maximize our profits in our portfolio with these two stocks. Before we get started, be sure and hit the like and subscribe buttons down below. Also, download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Today, we're talking about quantum computing and why it's poised for explosive growth. But first, what is quantum computing? Quantum computing is a cutting-edge field that harnesses the principles of quantum mechanics to perform complex calculations. Unlike classical computers that use bits or ones and zeros, quantum computers use quantum bits or qubits. These qubits exist in multiple states simultaneously thanks to a phenomenon called superposition. This unique property allows quantum computers to process vast amount of information in parallel as compared to the classical computers, which may take years longer to process the same information. So, why is quantum computing expected to grow? Well, experts forecast the global quantum computing market to reach $28 billion by 2033, growing at an impressive CAGR of 37%. After a brief lull, investments in quantum computing are rebounding, with quantum computing companies raising tremendous capital right now. And researchers are making significant progress in scaling qubit volumes and implementing quantum error correction. Quantum computing has potential applications across various industries, including finance, drug discovery, and AI. And the Quantum Insider projects the quantum computing could add over $1 trillion to the global economy in the next 10 years. All right, let's quickly touch on why IONQ and Rigetti are leading the charge in quantum computing. IONQ uses trapped ion technology, allowing for longer and more complex calculations with fewer errors. The stock is up 206% year over year, indicating strong market confidence. They've achieved a 99.9% single qubit gate fidelity, showcasing their technological prowess. They've got strong commercial momentum, and they're expanding their quantum networking initiatives. Now, Rigetti Computing employs superconducting qubits and operates Fab 1, which is the first dedicated quantum foundry. The stock has surged 789% year over year, reflecting investor enthusiasm, and their vertically integrated approach enables rapid innovation cycles. Let's take a quick look at their growth potential. The global quantum computing market is projected to reach $28.2 billion by 2033, growing at a CAGR of 37%. ION's robust balance sheet with $382 million in cash provides resources for continued development. Rigetti's $225 million in cash and investments supports its ambitious roadmap as well. Collaborations with major tech firms and government agencies indicate increasing industry adoption. All right, let's take a look at utilizing a LEAPS options strategy to maximize our profits in IONQ and Rigetti. Now, when we talk about LEAPS options, the first thing that we want to do is select the right LEAPS option. So we want to choose LEAPS with expiration dates about a year out to capitalize on the long-term growth potential of both IONQ and Rigetti. We want to opt for options with a delta of 0.70 or 70 deltas to balance the leverage and cost, and duplicate owning 100 shares of the stock. Before we jump into the live trades on the option trading platform, and I'll show how to do the LEAPS with both IONQ and Rigetti, I want to talk about utilizing a poor man's covered call, which is a variation on the LEAPS, where we just sell a call against the LEAPS. Now, this is going to help with the volatility of both of these stocks because we can make money in both directions. we can make money when the stock goes down as well as when the stock prices go up. So let's touch on a couple of things with the poor man's covered call. We buy a long-term deep in the money call option, or the LEAPS, on the stocks, typically about 12 months out. And then we sell a shorter term out of the money call option against the LEAP, usually 30 to 45 days until expiration. And with that, we collect premium. So we actually collect premium there when it costs money to buy the LEAPS. Now, to maximize gains, we take advantage of IONQ and Rigetti's high implied volatility to collect substantial premiums on the short calls. And for the long-term LEAP, it acts as a stock substitute, providing leveraged exposure to potential upside while requiring much less capital than owning the shares outright. Last of all, we want to manage our risk. So we monitor the positions closely, and especially as we get closer to expiration. Typically at about 6 months to expiration on the LEAPS, I'll roll back out to closer to a year. And we also want to be prepared to roll the short call to a higher strike or later expiration if the stock price rises significantly. So with that, let's jump into the live trades. By the way, if you'd like to receive the free options strategies trading guide, comment options guide down below and I'll send you the link. All right, guys, let's quickly show you how to place these poor man's covered calls in IONQ and Rigetti. I think these are great opportunities. We can look, first of all, this is the Tasty Trade option trading platform. There's a link down below. Great for option trading, and there's benefits if you go through my link. Also, utilize Moomoo, so check out that link as well, and there's benefits as well. All right, so we're going to punch in right here, IONQ in the upper left, and we're going to be on the trade page and table mode. Now, the first thing we're going to do is look at that LEAPS option about a year out. So we're going to look at this 355 days to expiration, December 19th, 2025 call or option chain. We're going to click on that to open it up. And then we're going to go, the stock is trading at $45. Actually, let's look at the chart real quick. So if we look at the chart, look at that parabolic straight up. So that's why, we've got to be careful. It can keep going, but it's already overvalued by a lot of people's opinion. But, I don't mind, because long term over the next year, it's going to keep going up is my belief. And even on the pullbacks, we're going to make money on the downside since we're doing the poor man's covered call. So if we go to the December and we go to the 40, we're going to look at chain, and we're going to click on calls are on the left, puts are on the right. We want to buy, so we're going to click on the ask on the 40 and buy the 2290 call. So that's one contract controls 100 shares of stock. So we're at the 76 delta. Again, we wanted to be above 76, and we're going to control the 100 shares of stock. And what we want to do is we'll click in the middle here. This will fill us in the middle. We don't want to pay the buy price of the ask price of $22.90, which is a little bit high. We can probably get filled for $21.95 right in the middle. So we could hit review and send and place the LEAPS option right now. I want to show you one thing here. If we go to curve mode and then analysis, you can see that just like owning the stock, as the stock price goes up, then we make money on the stock price move up on the LEAPS option. However, what we're going to do is we're going to sell a call against it. And this is the beauty of the poor man's covered call. So $21.95 right here. If we go to February, so we're going to go closest to 45 days. So we're just at the new year right now, and it's December 30th tomorrow when the market opens. So we're going to sell the February 21st 54 DTE call against the LEAPS. So it's not going to cost us any more buying power than we're going to pay right here on the $21.95. So it's $2,195 to control 100 shares of stock. If we bought the stock outright, it would cost $45.51 times 100, $45.51. So, more than double the amount to buy the stock outright. Now, we're going to sell against it the February call, and we can go all all the way to 55. So from 45 to 55, look at that. We sell, so we're going to click on the bid on the call to sell the 610. Now watch this 21.95 come down. 15.75 now. And we make money on the leaps on the upside. And as long as it stays below this $55 strike price, we keep this entire $610. So $6.10 times 100 shares is $610 that we're collecting when we place this trade. But we've got $10 of movement there also. So we can make that's a 20% gain on the leaps option. So we either make 20% in 1 month, basically a month and a half, on the upside on the leaps, or if it moves down, we collect 610 on the downside. So that's how you place the leaps in IONQ. We hit review and send and place the trade. So let's now look at Rigetti. We're going to do the same thing. So we're gonna punch in RGTI, and this has got a similar type volatility, high IVR. It's trading at $17 right now. If we go to the 383 DTE, days to expiration, we click on the January 16th, 2026. I'm going to click on the 10 strike. So in the money, we're trading at 17 right now, and it's $12.20. So we're going to buy that, and we're going to go to the mid price, $11.50. So we could hit review and send and place the trade. Curve mode again, you see it goes up in value as the stock price moves up. But we're going to go back to the table. We're going to close this, and then we're going to sell that February call against it. And we can collect $400. And watch this $11.50 come down by 400. $7.40 now. And we collect, and we can do this every month. So if we collect 400 over the next 3 months, that's $1,200. So it more than pays in 3 months for the cost of the 100 shares that we're controlling for the leaps option. So that's what I love about the poor man's covered call. We hit review and send and place the trade. All right, guys. So by employing the poor man's covered call and leaps option strategies on IONQ and Rigetti, we can make money as the stock price moves up, as well as when it pulls back on those downside moves. So with that, be sure and hit the like and subscribe buttons down below. Remember to download the free options workshop. Leave a comment. Let me know if you're going to invest in these or put on a poor man's covered call, or if you've got some other hot stocks that you want to share. Ask a question as well. I answer every one. Thanks for watching. I'll see you in the next video.